Hello everyone, I am Srimathi from BCom Digital Marketing and Data Mining Department. Now see the topic is various heads of income. The special category is income from other sources, IFOS. First of all, I will briefly explain the income from other sources. IFOS is savings bank account. First one, interest rates are get accumulated in your bank account should be declared in your income tax return under income from other sources. It must be noted that the bank doesn't migrate the tax deduction at source or TDS or savings account bank interest rates. Interest amounts for both requiring deposits or fixed deposits can be taxed. Deduction on interest income under Section 18 TTA. Interest income earned for a resident of India with an age of 60 years or less, Hindu undivided families for an amount of rupees 10,000 in a specific financial year can be exempted from tax. The deduction which is permitted on interest income is earned from the following sources. First one is post office savings account, second one is savings bank account, third one is savings account which is cooperative society which carried forward the bank business. However, the senior citizen can become entity to the benefit under section 80 TTA of Income Tax Act 1961. Next one is tax on fixed deposit. The interest received by the fixed deposits is added to the other income that you received as a professional income or a salary. You will therefore be required to pay tax on that specific income at a rate of tax which is applicable to your respective income slab. The tax deduction at source TDS is limited to the interest income it is received every through is might not have been paid off. Let's take an example. Suppose a bank deduct to the TDS on the interest earned every year on fixed deposit for a tenure of 5 years. Hence, you must keep in mind that you make the payment of your tax annually instead of doing it only when your fixed deposit matured. Avoid tax deduction at source of FDS. Bank must mitigate the tax when your interest amount earned from the fixed deposit which are held in all the branches of the bank allocated excess rupees 40,000 per year before the financial year 2019 is camp amount rupees 10,000 and the TDS of 10% migrated to the details of PAN are available, else it's to 20% the details of TDS on FD interested to maintained in the form of 26AS. If you aggregate income less than the limit of taxable income, you can prevent tax migration of FD by a submission of Form 15H and Form 15G to the bank. You can do so by requesting to the bank not migrate any TDS. Reporting requiring deposits being the Form July of 2015 when your interested amount earned by every branch of the bank including that from the incurring deposit goes to beyond amount of rupees 10,000 rupees a specific financial year of tax 10% on the interest income will be migrated. The interest income earned must be declared under the head income from other sources. Exempt income, the EPF and PPF amount which you withdraw after the maturities can exempted from tax. It must be declared under the head income from other sources. It must be noted to the EPF can be exempted from tax under after saving a period of 5 years. And then family persons. If you are collecting the pension of behalf a decreased person, you should declare it under heading income from other sources. There is a migration of an amount of rupees 15,000 about 1/3 of family person which is received, whereas the lesser from income from pension. It must be added to the income of a taxpayer, and tax should be paid at the rate of tax which is valid. Thank you.